Okay. Good day to one and all. This is Dr. Sivaram of iknowindices.com. I'll be presenting now the spike trade call. Before that of the BoE interest rate decision announcement. So it is a webinar for about 30 minutes from 10:15 to 10:45 GMT on the 4th of August, Thursday. I'm going to give you the market forecast using my forecast algorithm and the market reading technique, and give you the expected market moves for today and also what sort of trades we can do. I'll also give the trade recommendations during this particular process. And afterwards, 11 GMT, BoE is expected to announce the interest rate decision. And people are expecting this cut in the interest rate decisions, etc. But I am not here to comment about it. But the market is expected to come down during this particular process after the announcement. Then again, we'll come across during the US session, the market is expected to make an upward move. Now, let us look into the market, current market levels. Euro has made already the slide from that of 1.12, which they set by yesterday, and slowly come down to 1.1155 area, and then again for the drop of another 25 pips. In the case of USDN, which was around 100, and it has come to about 101.30 area. In the case of GBP, it went up to 1.3378 yesterday, and today they just set the high as 33.45 and came down a little bit to 32.79 and now firming up before that of the announcement. So we have another 45 minutes for the announcement. Slowly they will firm up and take out their stops above that of the high and then start making the slide after the announcement. This is what expected by the forecast. Now in the case of CHF, they are showing a positive net change. From that of 96 area, it has come to 97. And in the case of Canadian dollar also, it went up to 1.31 area. From there, it started making a slide. And again, they are expected to make the upward move. Australian dollar, it's holding around 0.76. It is expected to come down after that of the BoE interest rate announcement as a slide before the next rise, which they are expected to make it during the US session. So the expected market moves, which I have given it on Monday during my Asian session live market analysis webinar, that on Thursday what sort of moves are expected. So they are expected to make a dip and rise during the Japanese session. They just made the rise, and subsequently from the of 7:30 GMT they made the swing and slide, and now firming up as a false move before the data release. So exactly by 11 GMT, they will try to take out their stops above that of the high, or they may make a false move up to that of the high and start making the slide up to 13 GMT, the close of the European session. Then afterwards, during the gap time, they could make a small dip and hit the stops below the low what they are set now. And then subsequently, they are expected to make the rise again during the US session, telling some other story. And this is what I explained it here. They will spike down quickly, and that will give that impression to the traders. Probably the gain in the case of Euro and GBP is capped, and afterwards they may not be able to rise. Again, US dollar is going to be the king. That is what people might think. Then subsequently, you will find that swing and rise is expected to happen during the US session. As we know well, the players are least bothered about whether the currency is becoming stronger or weaker. But they are in the game, and they want the traders to lose so that they will be able to earn from that of the traders. When the traders lose, the players are able to earn money. For that, they have to be cunning. Yeah, I'm still presenting. Are you not able to hear me? Now, when the traders think that probably GBP might be capped and it may not be able to go above, and because BoE is also hesitating on this particular process, and they will talk about the British exit, etc., and confuse all the traders. And that will give the impression to that of the traders probably we should do the sell and buy trade, but subsequently the players are expected to gain the levels. And also tomorrow is non-farm payroll data release time, and after that they are expected to make a big upward move in the market. So keep in mind that the players are here to create the market sentiment and act against that of the traders, and effectively every time they do this, and we need to understand and trade accordingly. Now, these are all my trade calls for today. They could make a drop in the case of euro, even though it is pertinent to that of GBP, the data release. They could just create a drop further in the case of euro, and probably they may come to 1.11 area or slightly below that. So I'm just keeping a conservative buy level of 1.1074, and you can take look into that of the low what they are setting it below that of 1.1125, and once that new low is not breached for 30 minutes, you can take a buy. So I will tell you during that of the uh, post BoE interest rate decision time at what level I had taken the buy position in the market, and keep 30 or 40 pips below the hedge order, because I do not want to do a sell and buy trade here, because they are expected to make only a drop for about 1.5 hours and quickly stop cutting the low and start reversing the market. So if I am caught wrongly, then during the US session when they rise, then I'll be incurring loss. So in order to look into, after looking into that of the forecast model, I am trying to take a buy after that of the drop, what they are expected to do after the BoE interest rate announcement. We carefully see that from the start of the European session, they came down below that of 1.33 in the case of GBP, and after coming down before that of the data release, now about 30 minutes or so for the data release, and they are trying to come closer to the high. So this is how they just made the drop and the rise. So invariably the traders might think that, okay, GBP is going to rise from here, so they will be in a hurry to take up the buy position, or after that of the breach of the high, they will try to take the buy. But the players are here to trap such breakout traders, and then they are expected to come down and again breach the low what they have set. So they could come down to 1.3350 to 25 area, and afterwards they are expected to spike up to 1.33. So I kept a sell limit as 1.3, sorry, 3348 here above that of the high. In the event if it is filled, then I'll capture the profit during the drop, and again I'll keep another hedge order after booking profit on the sell and take a buy, and then try to close the position during the rise during US session. So that is what I am contemplating. And if you are not quick-witted, or if you are not hesitate to do either way trades, you can wait for the drop to happen, and after that of the drop you will find the new low is not been breached for 30 minutes, and then that gives the impression, or that gives the signal for us that the players have stopped dropping, because the traders have already liquidated the long and turned short positions. So that will be the indication that once they stop cutting the new low for 30 minutes, and if they continue to breach the new low every 30 minutes, that means it is an intentional move on the downside. Then we should not take the buy in a hurry. We should wait for the net change of 150 pips on the downside. Afterwards, you can take a buy position. That way, we will be able to do a very safe trade. In the case of Australian dollar, in tandem with that of the market sentiment, they could make a downward move below that of 0.76. Probably they will try to breach 7584, hit up all the stops before going upward, and at that time you can capture closer to the low a buy position, and again they are expected to gain the levels. In the case of yen, after making a small dip, already they have come to 101.36. It was earlier around 101.65. Then you can take around 101.25 or 26 level, and then once keep the hedge order to limit the risk. Once it start gaining the level, after that of the data release, you try to keep stop at entry and capture the profit on the upward move. So USDN, they have made the downward extended move to 100 level, and then subsequently they are expected to gain more levels. So if you got any question, kindly ask me. Okay. Then Fred is asking, can I define rise dip form? I'm having a hard time understanding this. Probably this is a webinar for just 30 minutes. So I may not be able to take time to explain all those things. Kindly come for the Asian session webinar time or during tracking the forex market together. Certainly I'll explain it. And actually the firm up and the dip are for about 25 pips up and down move, and the rise and the fall are about 45 to 65 pips. Rise is on the upside and drop is on the downside. Dip and firm up are for about 25 to 30 pips. So they are all nothing but the qualitative expressions of the quantum of move they are expected to make. And do you see USDN has, yes, USDN has bottomed out and it is expected to go up. Is USDN expected to hold? Yes, USDN is expected to hold low, start gaining the levels. Any other question, please? I'm willing to answer to this. So the dip and the firm up are just gaining about 25 pips on the upside or 25 pips on the downside will be the dip on the downside, firm up on the upside. And if it is of a 45 to 65 pips, then it is rise on the upside and drop on the downside. They are all common English terms. Because I want it to be as simple as possible, because for many people English is not the main language, so they should not find it difficult. That is why I present myself as simple as possible using simple format. Okay, GBP up or down? Okay, probably he wants to know whether it is in the long term or in the short term. Okay, 1.31 or 1.34. Actually, it is expected to come down to 1.3250 area and slightly lower if needed as a downward extended stop, and after that of the BoE interest rate decision, and then go to 1.34. So how do you want me to answer to your question? It cannot be 1.31 all the time or 1.34 all the time. They're expected to come down to 1.3250 area with little bit of downward move if needed in order to hit the stops, or they just make a dip so that those who are holding long position liquidate in a hurry, and then they start gaining the levels to 1.3350 area, and slowly by tomorrow we should be able to see above that 1.34 and 35 in the case of GBP. Any other question, please? Rather than focusing blindly on the levels, I want you to read the market and understand how they are making the moves, because reading the market will help you to fine tune your entry into the market. Because after entering into the market, You are asking every time whether it is up or down, up or down. That shows the restlessness. And once you become restless or once you become very anxious about the market move, when the market moves against you, you become furious. You try to hit the computer. And it is not the computer belonging to the player, it is your own computer. You might try to hit it. And that shows that your emotional stress is passed on to that of the inanimate things, and that is of no use for others. And by that, you become more emotional and make distress trades, and the players happily earn your losses. They earn out of your losses. So don't lose your patience. And only when you lose your patience, you become victim of the players. And again, if you try to become the victim of the player, that means you don't have a self-control. So first of all, you have to understand that the data release, the players use it as a market trigger time. And then they make whipsaw moves in the market. And you have to find out whether they will make an upward move first or a downward move first. And you can easily read it when they are firming up before that of the data release, and that shows that they wanted to take out the stops above that of the high and start making the slide after that of the data release. So when such moves happen as a false move on the upside, then you can take a sell, keep the hedge order to limit the risk. Sometimes they can continue to rise also. I do not know what is going to be the outcome of BoE interest rate decision. So we cannot blindly take the risk or follow the forecast 100%. We need to have the trading strategy to limit the risk and maximize the profit. And then once the market start coming down, then you can keep stop at entry and remove the hedge order. And once it goes below, you can book profit and turn long around that 1.32, below that 1.3279. They will try to come down and hit all the stops which are placed. Once the traders buy above 1.3545, they will try to keep the stop below. If it is the normal tendency as a breakout trade, then they will say it's a 1:3 ratio. The stop is 100 pips and the gain is 300 pips. They might keep 1.36 as the limit for the trade. From 1.3, the players seriously to 1.3250, hit the stops of the breakout trader and start gaining the level again to 1.34. And the trader who has done that would have thought that if I would have kept the position without a stop, I would have earned big money. The next time he avoided to keep stop, and then the market comes down 100, 150 pips, then he becomes jittery and he is not in a position to understand how to handle the position, because you would have taken too many positions based on your market study. And then later on, he finds that equity erodes in a big way. Then subsequently, you cut all the positions manually and see that the market goes up again. So never become the victim of your emotions. My humble suggestion will be use effectively the trading strategy as a contingency plan. In the event, if it is something like you have got a brake in your car, it doesn't mean that you have to press the brake in order to move the car. But the brake is for the emergency. In the event of emergency, if you want to stop the car, you have to apply the brake. And there is no point in telling that the other person is wrong. You have to, if needed, you have to apply the brake and stop the car in order to avoid the accident. So kindly keep in mind that the players are expected to make a small dip after that of the announcement and then go up. Accordingly, plan your trade. Then if BoE drops 0.25 basic point or 5, then it is bound to go down, right? And BoE take no action, then there will be no GBP move. So this is what fundamentally you derive. But you know also very well, when the US data is weak, then they can rise US dollar, they can rise GBP. So during the US session, they are expected to rise GBP, and there could be some other trigger that could be used to rise the levels in the case of GBP during the US session. So at that time, people will say that BoE is discounted, and then the sentiment created is short-lived, and subsequently everybody is talking about the US data or tomorrow's non-farm payroll. So they can simply divert your attention and say that non-farm payroll is vital. And once the non-farm payroll is announced, then they will say it is discounted. Now market is oversold, so it has gone up. Like that, they will just give, or the risk appetite has come in suddenly in the market. So everybody started buying Euro and GBP, so it is going up. So every time they can tell a different story. If you continue to believe those stories, you can continue to believe. But ultimately, if you are a trader, objective trader, you should know what the players intend to do and trade accordingly along with them. You cannot trade against them. You can only trade along with them, reading their mindset. Market expects to cut the interest rate decision by GBP is rising. Why? That is what, I'm just trying to tell you that they are expecting the rate cut. If the rate cut is not there, then they will simply say that the rate cut is not there. That is why it can go up. So simply don't go with it of all the fundamentals. See, we have been seeing on a daily basis so many fundamental data are being released, and how far such fundamentals are sustaining the market. No, there are so many occasions, even for example, British exit, which made GBP to come to 1.26. Is GBP now trading around 1.26? No, not at all. What happened to that fundamental sentiment created? Can anybody give a yardstick for that? Okay, interest rate cut by 0.025, this much of gain or a drop should happen in GBP or something like that. Nothing of that nature. They are all nothing but sentiment driven moves in the market. They are all nothing but the momentum create the euphoria in the market, subsequently subside and talk about something else. But you take a longer time to come out of that emotion. Suppose if somebody is laughing for about 30 minutes, he becomes tired. You ask him to cry immediately, it will take some time for him to cry. That is why we know that only those who have got the histrionic talent, that is acting, they can only change their expressions instantaneously. Then we call it as acting, histrionic talent. So ordinary people are not having the histrionic talent to laugh and suddenly start crying. So it is very difficult for us to change our mindset from that of the bullish to bearish. By the time the market has moved from bullish to bearish and bearish to bullish, then we become totally get caught in the market move. So avoid that calmly. Okay, thank you very much for the clarity, especially on the spike. Okay, thank you. So follow the market moves. So don't immediately take position because market is near that of the high, GBP is near that of the high, Euro is near that of the high. Avoid taking positions. Now you wait for the market to make a drop after that of 11 GMT. Then watch out how far they are coming down after the announcement. They may take about 15 minutes on the downside. Set the new low and stop cutting the new low for 30 minutes. That is the buy time. So I'm just given the approximate or the mathematically derived levels for you to enter, and these are all not the actual levels. So probably I will try to give you a conservative or a slightly risk appetite level 1.115, just 10 pips below that of the initial low. You just 1.1125. Just watch and keep the buy limit order. And here it is 32.79 is the low. So you can just keep 32.65 as the limit order. And if they come down a little bit, if it is hedged, then you can keep the hedge order also accordingly. And you watch the hedge for 30 minutes. If the hedging is not making profit, you cut and keep another hedge order. They will start gaining the level afterwards during the US session, and tomorrow they are expected to make an upward spike. So this downward move is a great buy opportunity for us, so that we'll be able to really capture good profit. And in the case of Australian dollar, you can keep it as 75.80 as the buy limit order. See, I just moved the levels a little bit on the higher side, because based on the momentum what they are showing it here, so they may not make a very big drop in the market, and that is why I just adjusted the levels. It might be a small dip in the case of euro below that of the low, and in the case of GBP they could make further downward move below that of the low a little bit and then start gaining. Even if they drop more, if they find a cluster of stops below that, and then they want to hit all the stops before going upward, there are two possibilities. If there are already the traders holding short positions, then the players might make a false move up to the low and start gaining the levels. They don't breach the low after the announcement. Understand that the traders have already liquidated the long and term short when they just made initially during the start of the European session, when they come to 1.3280 level. So you have to find out how the traders have got the positions. Accordingly, the players are going to make the moves. That is how we fine-tune our trades. So watch how they are handling, how far they are handling the low. If it goes below the low, then understand traders are predominantly long. Wait for about 30 minutes to enter into it. If they come up to the low and reverse quickly, that means they have just made a false move as if it is going to dip and then start gaining the level again to the high, and they may continue to gain the level during the US session. So you need not go to the various other type of data which are released in the Scott theory and things like the Scott levels, etc. Can simply watch the type of move the players are doing it, accordingly understand whether the traders are predominantly long or short, and accordingly you can trade. Okay. If tomorrow they make a rise in euro and GBP, that means they will drop USD CHF and USDN. See, this is the wrong assumption, sir. So don't think that they will be making always the USD gaining and the USD weakening all the time. Now, if you see that USD CAD is showing positive net change as the USD gaining move, Australian dollar is showing positive net change as the USD weakening move. So they can make in the market USD weakening as well as the USD gaining move for that matter. Now, USDN is showing positive net change and GBP is showing positive net change. USDN showing positive net change is USD gaining more. That is why USDN is going up, because N is the denominator here. And GBP, when it is going up and the positive net change, shows that GBP is stronger than US dollar. So it doesn't mean that always they will make USD gaining and the USD weakening move, and they predominantly make contrarian move. They are expected to make the euro and euro GBP and Australian dollar to gain, and also gain any two of the denominator currencies, either USDN or Canadian dollar, or CHF and USDN, or CHF and Canadian dollar and drop USDN. Like that, they can make any sort of contrarian move, and that you have to watch the live market code page and then tell before that of the non-farm payroll what sort of move they are going to do in the case of the denominator currencies. So anyhow, I'll give the spike trade call uh, the webinar during the after that of the BoE interest rate announcement. I'll come back by 11:45 GMT and give you for about 15 minutes the calls what I have given, what happened in the market, so that we'll be able to review and understand how the players create the market sentiment and act against the traders. Then again, I'll come back tomorrow and give you the Asian session live market analysis by 5 GMT. And before that of the non-farm payroll, I will try to give the spike trade call as well. Hope there is no more questions. So I'll come back by 11:45 GMT and review the calls what I have given it. So if you got any question, you can just reserve the questions and ask me by 11:45. Then I'll be able to answer those questions. Thank you for watching the forecast webinar and see you with the results by 11:45 GMT after the BoE interest rate announcement. Thank you.